Okay, traders, welcome to the Midweek Strategy webinar. Today is Wednesday, April 22nd, 2015. I'm Jamie Saettele, and let's get started. So the main topics that I wanted to cover today, main themes, if you will, wanted to focus on the yen crosses, specifically euro yen and pound yen. Kind of revisit. Remember last week we had identified what we thought could be some really important lows in these crosses, and it appears that is the case as pound yen and euro yen, especially pound yen, after today's move, have really come off of these big supports. In fact, pound yen, which you see on the screen here, is almost 600 points off the low that was made just last week, and we've broken through some important resistance. So we'll get focused on that and where there might be support to buy in the near future. We'll also look at in general the U.S. dollar pattern. Okay, I put up a free thing on the website last weekend on Sunday, talking about the behavior change we had last week. And so far, we are, the U.S. dollar is kind of doing, one of the scenarios that we were looking for. It's bounced from a downward sloping median line, and have the possibility of maybe several more days of strength in the dollar before we run into resistance, and then that would offer the opportunity potentially for a really big high reward to risk short play on the dollar. And then I want to take a look at the S&P 500. We've been trying to take out the highs here, it seems, for some time, and the triangle pattern that I had proposed several weeks ago appears to be the right idea. Whether that triangle is done or not, or we have another down leg within the triangle is very unclear, but the implication is that S&P breaks out to the upside, maybe trades 2140, 2150 at some point, and then falls apart. So we'll look at that. All right, so let's get started with the yen crosses again, specifically pound yen and euro yen. So pound yen, again, here's the weekly chart that you would have seen last, I guess it was last Tuesday or Wednesday, whenever that was posted. Okay, the long-term slope support. We had a J spike on the daily chart, and we also ended up having one on the weekly chart. Okay, so, there is the possibility of a broader resumption of pound yen strength. Up to this resistance line or even higher, potentially up to here, okay, and eventually maybe even, up into the median line or what have you, which would be, rally on the order of several thousand pips. The biggest thing to pay attention to, of course, is the fact that we were coming off big support. So when we, go down a degree here and we look at the daily chart, you can see that we've broken through this slope here. This, by the way, is the chart that you would have, seen, when I did the video report, right? Several weeks ago. So actually, I have it better, kind of on here, a little cleaner. All right, here we go. Okay, so here is the pound yen daily chart again, and this move here, upper parallel, I'll make it so that we can kind of see what's up. Magenta line, right? That was resistance. It broke today. So previously, we had been looking for identify low, an important turn, if you will. Was kind of hoping or looking for a move back into 76.50, 76.45 daily reversal support in order to get long, for this move higher. Obviously, things have changed here. So the fact that we've broken resistance now, what you want to do is you want to look for previous resistance to become support. So if we get that tomorrow, and I'll have this in the swing update here later, but if we get that tomorrow, it would be about 179.10 or so, and you'd look to buy into that level with a stop under 178.45, which is today's low. Okay, and what you'd be targeting, you do have possible trendline resistance up here, but what you'd be targeting, there's a pretty well-defined level. 181.14 is 61.8 of the decline from the February high, okay? You can see that it's pretty close as well to the high from the 18th, or March 18th, so that's 180.98. And then, if we zoom in further and look at the intraday chart, I posted this one this morning on Twitter. You've got two equal legs, okay? You go from the low here in early, or mid-April, the 14th, sorry, up into the high on the 17th, and two equal legs separated by that decline on the 20th, which would have been on Monday. You get two equal legs at 181.02. So again, you've got the 61.8, 181.14, 181.03 is two equal legs up, and you've got the high from the 18th here at 180, basically 181. So call it 181 as a level to be aware of as resistance. I don't know if we get up there before it pulls back or not. My concern, or my main focus concern here is getting long. This is the same, this line here. Again, this is the same line that the former resistance, okay? That's the one that you would be looking for to provide support. And as we know, it's even better when you get confluence, in order to put the position on with with an upsloping one. So you can see here this upslope line working with this bullish slope. This is the one we've been working with. This seems to be the right one to work with. The upper parallel from this, you can see right here. I'm putting my mouse on it. You can see that it's been support and resistance numerous times, and it's been pretty precise, right? You had resistance, support, trade around, resistance, and then it was just support here this morning at 3 in the morning. Okay, I was sleeping, 3 in the morning New York, so I wasn't around to post this at 3 in the morning, but that's the line that you would want to buy on more than likely at this point, especially since it intersects with former support, or sorry, former resistance being the magenta line here, tomorrow morning at about, again, 179-ish, okay? So 179 more or less in line with former, former horizontal resistance as well. So 179 gives you a pretty good, level to buy into on pound yen. And, it's fine and dandy, of course, to look at these longer term charts, give us perspective, and the fact that we could be setting up for one heck of a rip to the upside. But, again, the focus here is on the short term and trying to get in the position for, part of the move at least. So summarize 179-ish support. You could watch this line as well, which has highs here, resistance the 16th, and then yesterday. So those are the levels to buy into. Okay, work with that slope on pound yen in order to get on the long side. Euro yen, somewhat similar. It's the pound's obviously been much firmer than the euro here. I'll get to the euro in a second. I still think the euro's, there's a good chance, given how the market's been trading, in my opinion, for the euro to surprise on the upside. We'll get to that, but let's focus on the pound, the euro yen itself at the moment. All right, so all the orders that we put in for this euro yen trade, they haven't gotten triggered yet. We'll go to the euro yen long-term chart again. We've got all kinds of good stuff here. We've got confluence of slope, very long-term weekly chart here, okay? And again, your first big resistance is going to be this median line, which, you know, is roughly 130.75 this week or so. You know, trading-wise, targeting 130.10 on any initial long position because you've got the low from January there. But eventually, I see this thing, you know, potentially getting up to, you know, 134.10 or so. And if you look at the moment, this is something that's, you know, with the yen crosses, when we look at the momentum profile, okay, so this is a weekly chart. I'm going to show you both pound yen and euro yen. So pound yen, if you can see this, there's different dots on the charts, right? You have red dots and blue dots, and basically it gives you kind of, you know, an idea, you know, broader. It's a weekly chart, so it gives you, it's not a signal per se, but it gives you a broader idea of the momentum, whether the market's with it or not. And you can see that this dip, long-term dip here within, you know, this broad uptrend is more or less, we're getting these blue dots here, okay, signaling that this is a buying opportunity. And sure enough, we got that with the slope as well. Euro yen is even more pronounced. We've had it going on for 1, 2, 3, 4, 5 straight weeks where we've gotten all these, you know, buying little warnings, if you will. The really strong ones are in bigger, you know, larger dots. The smaller dots are not nearly as powerful a signal typically. But the last time we had a cluster of these dots like this was actually all the way back here in 2012 in August. Okay, so I think that there is certainly, based on this and based on the slope that I'm showing you here, there is certainly potential for some strong upside surprise, you know, in euro yen. We're already seeing it obviously with pound yen, but euro yen as well. You know, respect the potential for that upside surprise. And for euro yen, again, getting this in this position, looking for what, you know, a dip into former resistance. You know, unfortunately not, you know, the orders that we've had just haven't triggered. We'll continue to watch for support on this line, the blue line here, the lower parallel. At this point, let's see if this crosses here. That does cross there, so that seems to be actually, you know, a good level to trade into. So the good news is we do have the right slope, it seems here. 128.34 would be a level to watch for support. Again, that's the low hourly close here. Okay, it's 9 a.m. So 128.34 potential support. Looks like that intersects tonight during Asia. Support or 128.17 below, so you'd be able to actually put a long in your 128.36 or so with a stop at 128.15. Try to catch resumption of this move higher. And again, with euro yen, it's the same thing really. You know, the line, the slope that pound yen just broke, we're coming into it now, it seems, with euro yen. That slope resistance is, again, the upper parallel is still around 130.10 tomorrow, so that's why I still want that to be a first target on any long position that ends up being taken or triggered. Okay, so, you know, not much has changed as far as looking higher in the euro yen and pound yen. You know, that's, you know, still kind of the bigger idea at this point. Okay, now let's say that we try a long into tonight. Let's say we have a long, it's, you know, attempted at 136 or something, and the stop's 128.15, and it fails, there's still the possibility again of support coming in lower at 127.20. Okay, you know, in the event that, say, the market ended up finishing some sort of a, you know, a diagonal here, right? That's certainly a possibility. You have a 1, 2, 3, 4, 5 coming into resistance, sharp pullback to 127.20 over the next couple days, and that gives you an even higher reward to risk opportunity on the upside, you know, targeting, you know, again, you know, a third wave type of advance upwards of 130, 160, and eventually into that mentioned 134 area. So there's still plenty of opportunity in pound yen and euro yen especially, I think. Again, don't want to sell what I think, you know, sell it short, what I think is, you know, an amazing opportunity coming up here in euro yen. Raj asking if I'm still long Euro Aussie. I haven't put any Euro Aussie trade out, Raj. You know, I put out the charts on it, but I haven't put an order in Euro Aussie at this point. You know, it's still just sitting here, sitting at support. You know, again, I like the idea, I like the possibility of Euro Aussie on the upside. We do have an order in right now to short. Hold on here. Raj says, I thought you were holding on to 141. No, when all the orders and stuff that, you know, the swing, I mean, look, I'm in and out of trades myself all the time, right? But I can't possibly, you know, give every single trade because they change all the time. You know, so yeah, the swing ideas that I will present are meant to last for at least several days. And as far as that's concerned, Raj, there have not been any orders placed or entered at this point. You know, you can see that if you just look at the latest update, right? You can see if there's any open trades. At the moment, there's no open trades here, right? There's pending trades. We have a euro yen long entry. That's yet to be hit, okay, but that's what we're looking for. Watch list stuff, right? Aussie dollar looking to trade the range. We have an order to short right now because I put it on Twitter today to short Aussie dollar at 77.85 with a stop at 78.10, right? So, or 83 actually is the actual order, but, you know, if there's any official trade that's open, it would appear here, okay? You know, that does not mean that I'm discouraging you from, I'm not discouraging you from, you know, taking any trades that you know, think are good trades. You should do that. You know, but as far as the official swing trades that are, as they're posted here, there are not any open. Raj says, I notice most trades do not get triggered. Does that mean we don't trade? Raj, you've got to do what you are comfortable doing, okay? You know, I'm just because you're a relatively new member here, so just because some of the trades that since you've joined over the last week or so, yes, there haven't been many trades. The market's been it's been pretty quiet, and so the levels that we've been looking to trade haven't been triggered. You know, that can obviously change quickly. I mean, that's just part of the market, okay? Sometimes it's more active, sometimes it's very quiet. So, you know, sometimes the way we trade, the markets are trading into those levels, and you know, sometimes they're not hitting those levels. I mean, it's just the way it is, right? Again, we suggest that you use the information that we provide you to trade in a manner that's consistent with how you trade, okay? When there are opportunities that stick out that I feel confident in enough to put an order in here, that I think it's worth it with the reward to the risk, then I'll do so, all right? And whether you choose to take those or not is up to you, okay? I mean, you can go look at the trade history. You can see the first 3 months of this year, you know, there was on average 4 trades a week, but, you know, January and March were very active months. February was not as active, but January and March were very active. April's been a little less active so far. It's just the way it's been. Okay. Alrighty, so let's get back to the market. Where are we? Talking about euro yen, I think. All right. Well, so anyway, here's Aussie dollar. I don't even know what was I talking about? Euro yen. I guess I was talking about euro yen. All right. So euro yen, we'll be looking for support tonight. More than likely down near 128.34 could provide support. 128.17 is the level I think you'd want to trade against at that point. If that fails, then you might want to watch for support down here at this lower parallel. And if that fails, again, the bigger level to watch over the next several days, I think, is going to be 127.19. Jay Jackson asking, where is the trade history? Just scroll to the bottom, and you can see trades right here. Trades, and then click View Trade History. Okay? You can see right there. Trade history. All right? Okay. These are updated typically once a week. I don't have them all updated from last week yet. Obviously they'll be updated, as typically once a week over the weekend. All right. Okay, so let's get to Euro Aussie. Again, I like the idea on the upside of Euro Aussie from right here. The risk would be tight. You've got a lot going on here as far as the median lines are concerned. We traded into. You don't even have to pay attention to that one at this point. Just pay attention to this one. I'll put a sliding parallel on here. Okay. Mark says, I don't understand why the reward to risk wouldn't be worth it here. It is worth it. It's totally worth it. So yeah, we're right here at support. You've got support here, daily reversal level, again, 37.89. Okay, and the low here. Am I personally in this trade? No, I'm not. I could be in the next day or so. I don't know. We'll see how the market, see how things play out. We've got resistance in Aussie dollar up again at 77.83. I'm looking to short Aussie dollar at 77.83. And then, see, we'll be in that part of the leg, and, here it is. Mark says, why not call it? I'm just not, I don't know, I'm just not in the trade. I'm looking for certain aspects to, I just don't feel it. I don't know. If I were a robot and and I were looking to trade just at a support level, then I'd probably be in it. I'm just not, I don't know. I can sometimes, feel is what it's all about, and I'm just not in the trade. I can't give you an exact answer as to why I'm not in the trade. I'm just not in the trade. But yeah, we're at a huge level. So if the market were to break here, then that would be really significant, because you'd be breaking multiple median lines, and that would be a breakdown of epic proportion. But until it breaks, for Euro Aussie, you really do have to look higher because you're at support, right? So that's why I've been focusing on it recently, pointing out the opportunity, the fact that we're at support, okay? Market's at an inflection point, okay? It's not going to stay here. It's either going to break down or it's going to rip, okay? My gut I am having a feeling that we move higher off of this level for some reason. One would be the momentum of this thing. Okay. Again, talked about this, I think, or put this up in the one of the swing updates recently, but RSI here so far bouncing along the 40 figure, that's typically indicative of a range market. Okay, so you would expect to bounce off of this level. All right, that's that. But again, if you're going to play this, then use a stop. For me to get long here, again, there's certain things I look for. Okay, I want to see, the market tick higher. I want to see it hold above the 24-hour moving average, which is this line here. I want to see it hold above the 120 moving average, which is on the hourly charts 5 days. That's why I use those numbers. And so far, it hasn't really been able to do that, right? So if we can tick up here and trade higher, maybe again get back up to where we, opened the week, which was what, 38, and we opened the week at 38.20, but more like where we closed last week, which was 38.80. If we can get back above there, establish above these levels and start holding, then yeah, I'd look to, get on board, right? But, this is we're at a point right now in Euro Aussie where it's just sitting here, okay? Rallies failed, rallies failed, rallies failed. I'm not going short here because we could rip. I'm not really going long here because I'd rather wait for this thing to turn up and then join it. Sometimes there isn't a trade. It's okay. All right. Where were we? Let's look at some of the dollar majors, but before I do that, we're going to look at just the dollar index in general. So look at that bond breakdown. Good night. 30-year bonds getting smoked. Put this out today, this chart earlier before the breakdown, and I don't know. Bonds could be like could be a massive short. Gold typically follows bonds. Gold's weak today too. Watch for support at 1176 in gold in the coming days, but gold, a lot of people been getting bulled up on gold and it hasn't really done a whole lot. But so our interest, right, is in the U.S. dollar, okay? And remember, here's a chart. This should look awfully familiar. And it had the little behavior change last week here. That was last, I guess, Thursday. Yeah, last Thursday. And at the time, I had posted this same chart, really, saying that we're going to be looking for, a low over the next day or so in the dollar, specifically on this median line, okay? We got the low, and since then it's, it's been kind of a chop fest, higher, lower. From an Elliott wave standpoint, we'll, zoom in on this thing, and what we get here is a potentially, developing maybe an A, B, C move. Okay, so for fun, let's see where we would get. So 12.074 would be 2 legs up if we hold today's low. And that happens to be the exact 618 as well, so it's pretty solid. 12, nice little fib area. right there, okay? Now, fib areas are great, but I'm more interested in the slope myself. And at this point, what do we have here? Friday, I think there was actually, was it Mondays? I think it was Monday. Yes, Monday. So this was put up on Monday. Okay. All right. So you can see this is the chart from Monday I just showed you, right? So this is what I'm trying to say. The bounce to the median line, a good sign because we can now look for resistance from the upper parallel of that same slope which intersects former support late this week, Thursday, Friday. So at this point, that's tomorrow and Friday. The break below the median line, so if it traded down here, would indicate that we need to change the strategy and get bearish at that time. So now it's really wait and see at this point. What you want to see again is a move up here, and then for the market to fail up here, and then you have a huge short opportunity in the U.S. dollar. Okay, so this here behavior change. Okay, but now we're working on finding new slope, but on the downside, right? As the market trades with these parallels. So this is like step one here. So far have step two, working on step two, I should say, which would be for us to trade up into this level. Yeah. All right. So you can see kind of how that's playing out. So as this pertains to the different, the various dollar crosses, still have, again, potentially risk for one more pop, if you will, in the dollar, maybe one or two more strong up days. And, with that in mind, I have no problem selling this Aussie dollar into 77.85 right here, which is why the order is where it is. It's actually 77.83. That's the 61.8 of the drop from this morning's high to low. You can see right here, 77.83. So 77.85 again is the daily reversal level. And we did have slope at this morning's high. It's not one that I've shown recently, but it is there, and I'll show you it here. So you can see what it is here. You've got, I'll draw it so that you can get rid of this, and I'll draw it. It's the best way to see it, I think. So the high back here in February, okay. Low here mid-March, high at late March, right? Didn't do a whole lot of trading on any of the parallels, but we had the median line was pretty well defined at several points. And then this one ended up being support last night, actually, or 2 nights ago. And then so what you do here is you got the sliding parallel, and it's actually very precise, okay, as resistance this morning. So, it's one reason to potentially look on the downside here. And then, when we look at the slopes that we have been following, we're looking at support slightly lower, so tomorrow 76.75, and I still think that 76 to 30 area could be in play, especially if you get a stronger than expected dollar move into resistance, which again is very slightly higher. Okay, one good rally away from getting into that slope resistance for U.S. dollar. So that's the thinking on the Aussie right here. 77.80, 3.85, 78.10 stop above today's high. We did open higher this week and have come off, so that's a decent sign on the short side for near term. So while I think that Aussie's working on some sort of a big, huge broadening bottom, the trade over the next 24 hours might be on the downside. That's how I'm playing it here. Let's look at the Kiwi, because Kiwi is very interesting to me, and it has been for a while, but this daily chart, I mean, we have such huge resistance, to overcome, so it's like at the same time as having the US dollar index potentially trying to put in some sort of a topping pattern, the Kiwi itself is trading into some very interesting levels. And Kiwi's kind of been doing its own thing, right? I mean, Kiwi's been very firm. It's been rallying for, since February. Those of you that have been with me for a while, you know that I pay a great deal of attention to year open prices. And here we have the Kiwi. We've got sliding parallel, this big red guy here, okay, which has been decent resistance throughout this year. Okay, it cuts through basically every important high that we had at the end of last year, and then this year on January 15th, we're getting really close to that level now, right? We're getting really close to that level, and we also have the median line from a new bullish slope here, and we've got the year open, and it was today that it intersected. So, was hoping it'd come in and see this thing trading up into 77.60 this morning, and be able to put the short on, for a big trade. But at this point, we've fallen shy. Kiwi is exactly unchanged on the day here so far after getting up near the high. So look, maybe we're trying to put in a triangle here. I don't know. If we do and we get a little terminal thrust on the upside, we could have a bigger short position down the road. Just pay attention to Kiwi, all right? Lots to watch here for Kiwi, as is the case with most dollar crosses at this juncture. And, for most of the week, we've really been kind of in the middle of no man's land, right? Not a whole lot doing, trying to pick some levels here and there to trade on. Aussie's one of them. Kiwi, though, bigger opportunity possibly. At the same, time, if we, pop through 78, then that could change things significantly, on the upside. But let's look at also, I want to show you from a different perspective, from, say, just a classic chartist perspective, if you will. This could be just a wedge pattern too, okay? Right? So you've got downtrend and this wedge thing working here. The reason I say if things get above 78, it could change things, is because you don't really want to see the market trade up through the top of this wedge, okay? If it does, then you want to see it fail that day, to keep things, looking on the downside. So lots of resistance going on here, or big levels, I should say, to get through for Kiwi. So if it does get through, it'd be awfully impressive. But we shall see in due time. All right, dollar CAD. What I wrote last night. Not much to alter there, to change. We had the zoom and retest. Again, it would have been much better from a trading perspective if that zoom and retest occurred on Friday, because at that point we would have had a confluence to sell into, where at this point, the upper parallel from the shorter term structure, which has been really clean, right? You can see it much better on an intraday chart, which I'll show you in a second. But the retest, or this level again today, is like 23.65.75 or something up here. So rather than just selling into 123, we were kind of looking at this upper parallel as a level to sell into. We could still get up here. It's a pretty feeble advance here near term, but here's the levels to watch. Okay. So you can see all the resistance, right? Support. Friday panic lows into that news that we had. I just screwed this thing up, but I do. there we go. Here we go. And then, you know, kind of we traded above it here. So at this median line, the dark bold one here comes into play, something to watch out for potential support. And then, you know, these lines, no matter where they come in, this is highlighted here because this is where we would have been looking to short if we would have gotten up there, but we didn't get up there. So, you know, keep these in mind. They can still become short triggers. The upper parallel from this line could still be a short trigger. It just might be at a lower level. You know, if we meander sideways for a couple days longer towards the end of the week, you end up getting, you know, this thing coming into play, maybe even, you know, near 23.30, right? You kind of, you know, see us going back and forth, and then falling off a cliff again. So we'll see how dollar CAD wants to play out in the near term, but right now as I speak, not a whole lot doing, you know, from a swing perspective, just kind of, you know, laying in the weeds, if you will. The euro, I have to go over the euro a little bit. Again, just, you know, be prepared for something, you know, a behavior change. Don't be surprised if it happens. Again, this is the 240 4-hour chart. The slope, operative slope, if you will, from the 2014 lows in June and October. We've been following these things forever. We were following the thing all the way back here and selling back here in November. Do you remember we had several shorts off these levels here? And got tricked here, thinking a more important low was in place. Obviously it wasn't, as the euro went, you know, absolutely on a submarine type of trade from December on. But as it is now, you know, each time we've traded into these levels on the sliding parallel from it, you know, we've traded off. So we're coming back into these levels now, and I wrote last night, and this is the same thing to watch for, right? You've got the very little change here on the euro. It's flat on the day, but is trying to break through, it seems, this morning. Wasn't able to. Still have possible support down here at the blue line. Okay, if the market were to trade up through here, to this red line, you know, it'd be ideal to look for support at 107.25 towards the end of this week. And who knows, maybe that ends up happening while the U.S. dollar index itself is testing resistance, and then we get an opportunity to really put on a big trade. You know, kind of a game changer, if you will. But yeah, so looking for behavior changes if they happen in euro. Will be, you know, quick to outline strategy to trade it. But the levels are clean here. I mean, you know, we're just sitting around kind of at decision time here in the euro. Still have resistance up here. Eventually, I'm envisioning that if this thing does work on a larger advance, which I just have a gut feeling it will. Totally wrong. That's not scientific, but that's kind of how I'm viewing it here, given all the, you know, what's happened with the U.S. dollar index last week and the pullback and everything else, breaking important support, and then, you know, et cetera, et cetera. I think that we're in for a bigger move on the upside in the euro. And if we do get that, then we'll be looking at, you know, potentially a move all the way up, you know, fairly quickly within, you know, 3 or so weeks up to 112.70, 113, which is a confluence. Basically, it would be the next sliding parallel, right, from the long-term slope, the one that goes off all these highs back here in, you know, in October, November, all right? And we would have intersection with new bullish slope towards the beginning of May. So that is where my mind is on euro. Question from Raj. Never thought you'd ask. Pound Kiwi. You got it, my friend. Let's take a look at it. So it's been a pretty messy, you know, we've been looking for low, right, in pound Kiwi, and man, it's been messy. You know, we started looking at this thing like a month ago, and you know, since then we've rallied and dropped and taken out lows and reversed and all kinds of stuff. So looking at the daily here, the downslope, you know, that had been in play or in effect, if you will, we might have something on the order of a larger raised floor here. Okay, you can see the support, sliding parallel support, very precise support, and then the low yesterday and the reversal yesterday, we did not get down to that lower parallel. And today we pushed higher, as have all the pound crosses towards pound strength, and we're testing resistance right now. Okay, so resistance right now here in pound Kiwi. If we go to a shorter term chart, you know, we could see potentially where there could be support. At this point, it's just a rally within an uptrend, or within a downtrend, sorry. If we can trade sideways for a bit and then maybe get, you can kind of see what I'd be referring to. If we can make 5 waves up and pull back, then we might have a heck of a buying opportunity in pound Kiwi for a big swing on the upside. This is how a lot of these crosses are going right now, whether it's the pound commodity crosses or the pound against the Japanese yen. They're all like in the process of basing, it seems like, for much larger moves, okay, and bigger trend changes, right? The momentum's really slowed on the downside. You know, we're seeing these very minor behavior changes, like not making it down to support, getting the raised floors, et cetera, which tells me that we could be on the verge of something more important happening, going the other direction. Okay. All right. We have here yen crosses, euro yen perking up. I know I wanted to talk about, the last thing I forgot, I wanted to talk about the S&P. So the S&P 500, remember we had talked about the triangle, right? After the decline we had Friday, I'm pretty shocked, but that's what markets do. I'm pretty shocked that we didn't get down to, I was expecting us to retrace this whole thing, but I was also looking for us to trade to 2048, 2050 and get support for wave E here, right? A, B, C, D, E, and then for us to get the breakout higher. At this point, I don't know. I mean, the last couple days here, we have put in, it seems, put in some, you know, bullish slope. The market has been responding at the recent lows here. Okay, today's low is right on the lower parallel. You know, so at some point this is going to take out the highs, and we're going to get a move up to probably this confluence up here, which is in just a little above, or it's almost right at 2150 in the beginning of May. Okay, and the thing to remember about triangles, right, is that they are indeed terminal in nature, meaning that the rally that will come from the triangle after the triangle takes place, it should, well, not should, but it oftentimes does, you know, precede the final, you know, the final consolidation of the move. So that move higher from the triangle is often the last move within a broader trend, and then you completely retrace it. So, you know, we've got the slope to work with here. You know, it's a long time coming, obviously, but we've got good resistance at 2150. If, you know, we continue to follow this short-term slope, the median line intersects there too, again, in the beginning of May, so we kind of have a time thing there too to look for. And if you think from, you know, intermarket perspective, if pound, or if, you know, the S&P 500 can make a break up into 2150, that's 50 handles from here, you're probably going to get additional strength in the yen crosses too that we talked about, euro yen, pound yen, etc. So, you know, I like where we're at as far as that analysis is concerned. You know, a breakdown in bonds, same thing, higher yields should be supportive of yen crosses. Gold breaking down here too, one would think, supportive of yen crosses. So I'm told that the audio just went off, but it looks like it's still working. You guys, okay. Alrighty. All right, so you know, in a very general sense here, you know, be aware of where we are in the S&P. Okay, we had the bond breakdown this morning, flagged that early this morning. We're getting potential now for a triangle breakout to the upside in the S&P 500, which may finally get us into the final highs of this very, very long-term move. All right. All right, so good stuff. I pretty much covered what I've got to say here as it pertains to, you know, the big things for me still are the yen crosses, especially euro yen, pound yen, Kiwi dollar itself, right? Aussie dollar shorter term stuff, looking for that short here in a couple pips. And then, of course, the implications from the S&P and the triangle breakout that's coming and that I think probably ends up failing. But we'll be there to catch it when we can. All right. Okay, guys and gals. Thank you so much for attending today. I'm going to shut it down here unless there are other questions. And if there are, I'd be happy to answer them. Okay, Mark, you're welcome, man. Joseph asking, should we be getting out of any Euro trades this weekend? I mean, I'm not in any Euro trades at the moment, but, you know, if you're asking about trades that are your own personal trades, you know, I don't necessarily want to comment on those. I'm more than happy to comment on the trades that I put out. Again, with the Euro, Joseph, we're looking at, you know, this is what we're looking at for the Euro, right? Well, we want to see a change in behavior take place before we put on a long position. You know, look, I think the Euro is going to break out. So going long here with a stop at, you know, 106.50, you know, that might do you good. I don't know. But what I want to personally see, because we failed here at this morning's attempt, again, I want to see us trade out of here and then potentially find support. Okay, maybe on Friday, and then that's when we put on a long position at support with tight stop. Oh, Joseph asking about Greece. Yeah, I don't, look, that's not really my thing. You know, when it comes to you know, trading, Greece has nothing to do with any of my trades. I'm not trying to sound flippant, just being totally honest. I do not pay attention. I'll tell you, you know, yes, I get it. The market will go, you know, bid or offer one way or the other when there's some sort of news event. But look, you're not gonna have any knowledge of that before it happens anyway. You know, trade with stops and don't over leverage. And sometimes it'll be in your favor, sometimes it won't be in your favor. You know, at the end of the day, you know, it's kind of a wash there. So exactly, Sandeep, we'll stick to trading levels. That's what I'm talking about, my man. Stick to trading the levels. That's what it's all about. That's the name of the game. All right, so again, thank you all so much. Have a great rest of the week. We'll be out with the swing update later. You know, looking to try to position for some of these yen moves, right? I think that they, you know, do offer high reward to risk opportunities still, despite the fact that pound yen's kind of gotten away from us a little bit after the call for a low last week. In any case, have a good one, and be back with another midweek strategy webinar next week. All right, take care.